Hello, traders, and good morning, good afternoon, good evening to anyone or to everywhere you are today. Good morning, good afternoon, good evening to all of you, and welcome to the ones who are here with us at the beginning of our session for today. So, hello to Jomar, and hello to hello to you. I'm sorry I was not able to read your username. So, hello to everyone again. So, once again, I would like to introduce to you myself. I am Paul Mendoza, and once again, I will be your trading speaker for today. So, before beginning, I would like to invite you to please like this video, and you may also share it with your friends. And please subscribe on our YouTube channel and click the notification bell for you to get notified or for you to get a notification once we go live again for our next webinars, for our upcoming webinars, especially on December 9, where we are going to talk about a lot more um, technical analysis. So for those who are here that wants to or who are looking for a lesson on how to read price action, so please type yes. Okay, so hello to Justice Ampa. Hello to Omoge Adeshina, who are here early at the start of our session for today. All right, so to continue, we are moving on with or we are continuing with our Forex basic fundamentals. So last week we talked about the basic fundamentals about what is the meaning of Forex and how to earn from it. So today, what we are going to discuss is all about the advantages of the Forex market and when to trade the Forex. So that means that there's a specific session or a specific time whether you want to trade the USD, the Euro, or the Japanese Yen. So we are going to talk about that today and some Forex basic terminologies and how to open your first trade on your actual MT4 account. Okay, so if you want to learn how to open your live trade on your live MT4 account, so please type yes. All right, so to begin, again, we are going to talk about the basic fundamentals of Forex trading. And to begin, here, as you can see, maybe uh, you remember that we talked about this last week about the advantages or some of the advantages of the Forex market than the Philippine stock. So we compared it last week, if you remember. So some of them are the Forex market is open 24 hours per day. So this is the one of the advantages or one of the most reason on why I chose to trade the Forex market instead of trading the Philippine stock or the stock market in general. So because the Forex market is open 24 hours per day and 5 times a week, so that means I can trade whenever I want, right? So shout out to Johnny Ano and DM Dora. So again, I chose to trade the Forex market because it is open 24 hours a day, and that means I am able or I can trade whenever I want. So if I have a full-time job, let's say here in the Philippines, our normal or our usual schedule for our day job is from 8 a.m. to 5 p.m., right? So let's say that you are working in Manila and you are living in let's say Calabarzon. So you need at least 2 hours of time travel after your shift. So that means um if your shift ends at around 5 p.m., then you need to travel for at least let's say 2 hours. Then once you go home, once you arrive at home, then you can trade the forex market, let's say at around 9 p.m., 10 p.m., or even 12 a.m., right? Because it is open 24 hours per day. So this is the most common reasons or one of the advantages of the Forex market. You can trade whenever you want. You can also trade before going to work, or if you are a student before going to school, you can trade in the morning, in the afternoon, when you are taking your lunch break, you can take a look at some chart and you can trade with it, right? So that's the one of the advantages of the Forex market. And the other advantage, or the second advantage of the Forex market is we can trade both direction, right? So last week we talked about this. I mentioned last week that as a Forex trader, we can go long once the price go up, and we can go short if the price goes down. Okay, so let me show you a sample of it. So here, as we can see on the trading in the trading view platform. So here, as you can see, I go long from this pullback. So once I identify the resistance right here, then I saw that the price is pulling back into this support zone. Then once I got an entry candlestick pattern from this level, then this is where I put my buy entry. Okay, so as you can see, I bought here at this blue arrow, and then I took my profit here from this red arrow right here. So as you can see, I was able to go long on this specific trade. So just like what we have here, we can trade both directions. So this is an example of a buy trade or a long trade, and an example of a short trade or a sell trade is here on the Aussie New Zealand. So here for the Aussie New Zealand, I saw that the price is sitting on this resistance zone. And then, as you can see, I have two trades here. The first one is right here, and then the second one is right here beside it, right? So what I did here is, once I saw that the price is inside this resistance zone, then the price showed me this entry candlestick pattern. I thought that the price may go down. So as we can see, the price showed me these two red candles, but unfortunately the price stopped out my trade or stopped me out. So that's why I bought here, or I closed my trade here. And then once I saw another opportunity to go short or to take a sell trade. So here, as you can see, I opened another sell trade, and then I bought it here below. All right, so this is what I'm talking about. So we can trade both direction in the Forex market. We can go short like this, or we can take a sell trade. If the price is going down, we can take advantage of this volatility, this correction move, and we can also go long like this from this Canada Swiss trade. All right, so that's what I mean by trading both direction. Whether the price is going down or whether the price is going up, we can buy with this uptrend and we can sell with this downtrend. Or if the price is gaining momentum to the upside, we can buy, or if the price is gaining a momentum on the downside, then we can sell. All right. And the third advantage of the Forex market is the liquidity. So liquidity means that if you want to buy at a certain price, so let's say, oh, hello to Ewok Youth. So if you want to buy at a certain price, so let's say, uh, let's go back again to the trade example that I just showed you. So here, as you can see, I bought here at this candle, and my entry is 0.70764, right? So liquidity means that if you take a buy trade, then That means you can buy at a certain price without any significant change of that price entry that you want to take a buy order, right? And likewise, you can sell at a certain price, like here. As you can see, I sold at 0.70807. So you can take your profit or you can sell at a specific price point without any significant move or significant change to the price. So what that means is, so let's say you want to take your profit here. If this pair has low liquidity, then you can close your trade around this level. So you need to wait, and sometimes you need to sell it at a higher price rather than your target. So that means, so let's say our target is around this level. So let's say our target is around this level. So if this pair has low liquidity, then that means you can take your profit here. You might end up selling around this level, which is not a good um, result with this trade. As we can see, after the price reached this level, the price went down and it didn't reach this price point above here, right? So that is the importance of liquidity. So here in Forex, we have a lot of liquidity and we are not going to, or we will not have a problem on buying and selling at a certain price action. Okay, so because we have a lot of liquidity here in the forex market, you can trade comfortably and you can trade with a specific price that you want to enter. So let's say we want to buy here, then you can place your buy order here without any significant change in that price, in that particular price. All right, so that's the importance of having a high liquidity. Okay, so we can or we should just or we should look for the major pairs. So we talked about this last week. We should just trade the most common pairs or the most common uh, forex market pairs, because some pairs, or especially the exotic pairs, has low liquidity into it. So if a price or if a pair has a low liquidity, then that's not a good pair to trade. All right, because that will cost us a lot and we can close our trade on a specific price point that we want to sell. Okay, so hello to Erswin, hello to Kim, and of course, entering the forex market or entering a trade or trying to trade the forex market has low cost for us, especially the retail traders, right? So we can open an account with at least $1 to $200. Okay, and with this amount, uh, again, I want to make an example. If you are going to open your own traditional business, then $1 to $200 is just a small amount of capital, right? You need to put up a lot of money, a lot of capital for you to be able to put up your own traditional business, especially if you want to open a factory, to open a restaurant or something like that, right? But here in the world of forex market, you can start trading with just $1 to $200. Okay, and the beauty of the forex market is once you are satisfied with your profit. So let's say you were able to double your account. Let's say you make a profit of $400. So that means you gain 100%. So whenever you want to withdraw, then you are free to withdraw any amount that you like to withdraw. Okay? So let's say after 1 year you were able to double your account or you were able to gain 100% of your account. And if you want to withdraw all of your money, then you can do it. All right. So that's the advantages of the Forex market. Of course, there's a lot of advantages that the Forex market has compared to other business or compared to other market. So, but we can't talk all of those things today because we only have a limited time. So, if you want to attend our private Q&A session, so please watch watch us or be with us until the last workshop until up to December 9. So be with us, watch us up to December 9, and take part on a live trade on your MP4 account, on your live MP4 account, and then we will send you a link on where you can join us on our Q&A session. So in that Q&A session, we can talk about a lot about this Forex basic stuff. Okay. So here in our live webinar, we can talk about everything because we only have a limited time. Okay. So that's why I want to encourage you to join us on our Q&A session. All you have to do is to finish this workshop. So today is the second workshop. This is our second webinar. Last week, we conducted our first webinar. That's the beginning of this workshop. So please watch us, or so please be with us until December 9 and open your live live trade on your live account, of course, on our on our platform. And then once you did that, then we will invite you. We will send you our a live or a link for that live Q&A session. Okay, and you can also sign up for that Q&A session. You will see a link on the description below of this video. Okay, so again, to recap, some of the advantages of the forex market is it is open 24 hours and five times a week, so we can trade whether we want to trade at night, at noon, or in the morning before we go on our school, on our work. We can trade anytime. We can trade both direction, just like I showed you before on my trading view. So we can go long if the price is going up, and we can go short if the price is going down. And the price or the forex market has a lot liquidity, so we can trade at a specific price point without any significant change into it. And of course, the cost. Okay, we don't need to put up a lot of money just to open a live account. Okay, so by the way, before I forgot, we also offer a demo account on our platform. If you want to test your strategy, and if you want to test on how to trade the forex market, if you want to test on how to open your first trade or how to open an order, then you can do it on your demo account. Okay, so later we are going to talk about on how to open your first order or how to open an order on your actual MP4 account. Okay. All right, so moving on for our second point for today. So the question now is, so now that we know that the forex market offers a lot of advantages, now the question is, when is the right time to trade the to trade forex, right? So here on our in this graphic, we can see that we have a specific trading session for each and every um, market. So here, or for each and every session. So here for the Sydney session, we can see that the trading session for the Sydney or the Sydney session will open at 5 p.m. and it will close at 2 a.m. Eastern Standard Time. Okay, and the Tokyo session will open at 7 p.m. and it will close at 4 a.m. again Eastern Standard Time. And for the London session, so this is one of the most traded session, the London session. It will open at 3 a.m. and it will close at 12 p.m. Okay? And for the New York session, here it will open at 8 a.m. and it will close at 5 p.m. So for us to be able to understand it clearly, so let's take a look at this. So here we can see that the Sydney session, like just like what I mentioned earlier, it will open at 5 a.m. here, and then it will close at around 2 p.m. Eastern Standard Time. Okay, so here in the Philippines, all you have to do is to change it to AM. Okay, so in Eastern Standard Time, this is PM. So in the Philippines, all you have to do is to change it to AM. So if you are living in the Philippines, then this session will open at 5 a.m. and then it will close at 2 p.m. Okay? And for the Tokyo session, it will open at around 7 a.m. and then it will close at 4 p.m. Okay? And for the London session, so here, for this time, all you have to do is change it to PM because this London session in Eastern Standard Time, it will open at 3 a.m., but in the Philippines, it will be PM, right? So it will open at 3 and then it will close at around 12. Okay? And for the New York session, it will open at around 8 and then it will close at around 5. All right. So as you can see, the important thing to notice here on this each and every session right here is, as we can see here in uh, London session, we have a lot market participant right here, right? So as we can see, we have a thicker green indicator here than the Sydney and Tokyo session, right? So the meaning of this is there's a lot more market participants in this specific session. So that means if you want to trade, if you want to trade the euro, if you want to trade the pound, the GBP pairs, the pound pairs, the euro pairs, then London session is the good session for you, or is the good time for you to trade those pairs. Okay, and if you want to trade the Aussie pairs, the AUD pairs, then the Sydney session right here is the right timing for you to trade those specific pair. So if you want to trade, let's say the Aussie yen or the Aussie Canada. So whether you want to trade the Aussie Canada or any Australian dollar pair, then you may want to look for the Sydney session. Okay? And for us to trade the Tokyo session, then obviously this session is a good time for us to trade the JPY pairs or the Japanese yen pairs. All right. So, and as we can see here, we have crossover. So here between 7 up to 2, the Sydney session and the Tokyo session has a crossover, right? So as we can see here, it will uh, it will cross the Sydney and Tokyo session will cross around this specific time. So this specific time period right here between 7 up to 12 or 2, sorry, between 7 up to 2. This is the great or this is the right time for us to trade the Aussie yen pair. Okay, because here in this specific session, the Aussie and the yen pairs has more volatility than this session right here. because a lot of market participants are trading these currency symbols or these currency pairs in this specific session. Okay, so the central banks or the banks in the Australia or in Japan are open and they are actively participating in the forex market in this specific time period. Okay, so likewise, if we want to trade the euro, again, just like what I mentioned earlier, if we want to trade the euro or if we want to trade the pound, then this London session is a good time for us to trade these currency pairs. All right. So because here in this specific time period, a lot market participants are actively trading euro and pound pairs. Okay. And if you want to trade the USD, then obviously you may want to look into this New York session. Okay. Between 8 up to 5. All right. So if you are in the Philippines, then it will be 8 a.m. or 8 p.m. rather, 8 p.m. up to 5 a.m. Okay? And just like here, the Sydney and Tokyo session, if they have crossover, we also have a crossover in London session and the New York session right here, as we can see here, right? So it will be around 8 up to 12. So between this specific time period, it is suitable to trade, or this time period is a great time for us to trade, let's say, the euro dollar or the euro pound or the pound dollar or something like that. Okay, because here in this specific time period, a lot of market participants are actively trading these currency pairs. Okay, and again, as you can see, in this specific time period, there's a lot market participants done in this session. Because as we can see, this green indicator is thicker than this one, right? So that means there's a lot more volatility in this specific time period between the London session and the New York session. Okay? And for our third point for today, so we are going to talk about some basic terminologies of Forex. So last week, we talked about the what is a currency pair and what is a pip, right? So today, we are going to talk about the leverage and the margin first. So these two are correlated. So leverage means that the textbook definition of this is having the ability to control a large amount of money using none or very little of your own money and borrowing the rest. So what I'm trying to say here is, let's say you open an account with us here at OctaFX. So let's say you have a $200 account, and then let's say your leverage is 1:100. Okay, so that means you will then be able to have a buying power of $2,000. Okay, or $20,000 rather, because your leverage is times 100. All right. So what I'm trying to say here is you can open a lot more lot size. Let's say you want to open a one lot size or two lot size, then you will be able to do it because you are controlling a large amount of money, or you are controlling a large amount of buying power. Okay, but if you only have a 1:1 leverage, then that means all you can trade is your $200. And that means you can trade one lot with this size or with this account. Okay. But if you use a leverage, let's say you use, again, let's just use 100, 1:100 leverage, then your $200 will become $20,000. So the meaning of this is you will then be able to control a large amount of buying power. So rather than having just $200 on your account, then you will be able to trade a large amount of money, and you will then be able to open a large amount of lot size, which is 1 lot, 2 lots, 3 lots, or something like that. Okay, so we are going to talk about the lot sizes more on these basic terminologies later. Okay, and here the margin, this is correlated, leverage and margin is correlated. So margin is the initial capital that a trader needs to put up in order to open a position. So a margin also gives a trader like us, especially the retail traders, the opportunity to open a larger position size. So let's say you have 1:100 leverage, and then your margin became, let's say, let's say your margin became 100%, and then you open a trade on the euro dollar, and then once you open a trade, then you will then be able to see it on your terminal inside your MT4 platform. Okay, so later I will show you how to open a trade, how to open an active trade on your actual MT4 account. So let's say here on the euro dollar, you open, let's say you open a trade, and that trade costs you, let's say, around 20%. So because you have a large leverage, then that means you will then be able to have a huge margin. So in this example, let's just say you have a 100% margin. And then once you open a trade on a specific pair, in this case, let's say the euro dollar, it will only cost you 20%. So that means you will still have 80% left on your account. Okay. So you can then be able to trade other pairs like, let's say, a dollar yen or the Aussie dollar. And let's say here on the dollar yen, we need, let's say, around 10% of our margin. Then your 80% will become 70. Okay. And then once you open a trade on the Aussie dollar, let's say here on the Aussie dollar, you need to, you will, it costs you at around, let's say, 20% as well. And then you will then be able to have 50% margin. Okay. So you can, you can open, a lot of, or you can open, pairs together because you have a large margin. Okay. Or you can open, trades between, let's say, 2 pairs or 3 pairs, and you can open them all together at once because you have a lot, or because you have a large margin. And if you are using a large leverage, then you can open a large amount of volume or lot size. Okay. And speaking of lot size, let's talk about it right here. So here in this lot size, we can see that here in forex, in the forex market, lot size means that it is the size of your trade, or your position that you will open. So one lot in or one standard lot in a currency pair is equivalent to 100,000 units of the base currency of the pair. So what I'm trying to say here is, let's say you open one lot. Okay. So for each and every pip that or that the price increase, then one lot will give us, or will cost us $10, $10 per pip. All right. So let's say the price of the euro dollar is around 1.1234. And then let's say the price of this pair increased 1 pip, it became 1235. So this this currency pair increased 1 pip. So that 1 pip will give us $10 if we open a one lot on our MT4 account. Okay, so again, I will show it to you later. So let's say the price went up 5 pips. So from 1234, it became 1239. So it increased up to 5 pips, right? So if you open one lot, and if one lot is equal to $10 per pip, then your 5 pips times 10, it will be $50, right? So this is the meaning of lot sizes. It is the volume or the size on whether you open, let's say you open one lot, you open two lots. It will depend on that size, on whether you will earn or you will whether you earn or lose your risk or your money. It will depend on how many lot size you open. Okay, so moving on, let's the next one for this is the 0.1 lot, and it will cost us, or it will give us $1 per pip. It will give us $1 per pip. Okay, and the last one is 0.01 lot. Okay, and this will give us 10 cents per pip. Okay, so what this means is that, let's say we open a trade. Let's use our own currency, the dollar against peso. So for us to be able to understand it clearly, so let's say the dollar against peso is trading at 56 right now. Okay, and let's say we open one lot in this trade. So that means for one lot size, it will give us $10 per pip, right? So let's say the price of the euro dollar or the dollar to peso increase up to 10 pips. So let's say from 656, it became 66. 66, the price of the dollar to peso became 66. If we open one lot into this trade, then that means this 10 pips will give us a $100, right? Because 10 times 10 is 100. So to be able to understand it clearly, it is something like, if the price of an asset increase 10 pips, then all we have to do is to multiply it on how much a single lot will give us. So in this example, one lot, and then it will give us $10. And then the price of the asset increase 10 pips. So all we have to do is to multiply those two numbers. So 10 times 10 will give us $100 in profit. All right. So let's say the price of the dollar to peso became, let's say it increased 5 pips. So that means from 56, it will now be 61. And our lot size, let's say we put one lot on our on that specific trade. So what we need to do here is to multiply 10, because one lot will be equal to $10 per pip, and we got 5 pips right here, right? So we will multiply it to 5 because we gained 5 pips on that specific trade. Okay? So 10 times 5 will give us $50 in profit. All right. So in case we bought that specific currency pair and then that currency pair went up, then we will make a profit on that trade. But if the price went down, let's say the price went against the trend, goes against the our position, then we will also lose this $50. Okay. So let's say we open a trade of 0.1 lot, and then the price of an asset increase 10 pips. So 0.1 lot will give us $1 per pip, right? So let's say the price of an asset increase 10 pips. So all we have to do now is get the pip or the how many pip that the asset increase. So in this case 10 pips, and then let's multiply it to how many lot size we open. So in this case 0.1, and it will give us $1 per pip. So in this case we will multiply it to 1. Okay, because 0.1 is equal to $1 per pip. And in this case, the price of an asset increased 10 pips. So it will then be 10 times 1. It will give us $10 in profit, or $10 loss in case the trade go against our position. Okay? And let's say now we open 0.01 lot size. So this will give us 10 cents per pip. So again, if the price of an asset increase 10 pips, so we just need to compute this one. So let's say 10 pips, and then we need to multiply it now to 0.1 because 0.01 lot size will be equal to 0.1 per pip. So it will be 10 times 0.1, and it will give us $1 profit for the trade. All right, so can you now see the pattern? So I believe that lot size is one of the most very, very important aspect in Forex trading because it will cost you a lot if you put a mistake on your lot size, and it will be dependent, or your profit and loss will be dependent on how many lot size you put on your MP4 account, right? So here for our last uh, point for this basic terminologies of Forex, it is all about the bid and ask price. So the bid and ask price, we can see this on our MP4. So later I will show it to you. So price takers, so this is us. In Forex, we are considered the price taker, right? So price takers, so these are the retail traders just like us. So we are buying at the price and we are selling at the bid price. So we are so here on our MT4 account, we can see, let's say we have us and then bid. And then let's say for the ask price, it has $1, and for the bid price, it has $2. Then for us retail traders, so here again, we are considered the price taker. Then we need to buy at the ask price if we want to buy. Then if we want to sell, then we are going to sell at the bid price. All right. So let's think of something like if you are going to buy a car, so your dealer will um, quote you some specific price point. Let's say it will ask you to buy that car, let's say at around $1,000. So notice that the ask price is from the perspective of the seller or the dealer, right? And based on that asking price, we need to buy it depending on how much that dealer is asking us. All right, so the same thing is true on Forex trading. All right, so just think of it, just think of it like we are buying at the ask price and we are selling at the bid price. All right, so that's how the bid and ask price is working, especially for us retail traders. All right, so that's our third point, which is the basic terminologies of Forex. And right now we are going to talk about our fourth point, which is how to open your first trade. So, uh, again, we talked about this last week. Forex brokers are firms that provides traders an access to platforms that allows us to buy and sell a foreign currencies or a specific currency pair. So a Forex broker or a Forex platform looks exactly like this. We can trade on our phone or we can trade on our computers, right? So what the platform looks like is something like this. Okay, so here let me show you the actual uh, MT4 platform. So here we are now inside our MT4 platform, and let me just walk you through it before I showed you how to open your first trade. So here at the bottom, this is what we call the terminal. So we can see our specific price or if a specific currency pair below here. So here, if we want to trade the Aussie Canada, so here is it. If we want to open a trade on the Aussie dollar, then here is it. Here it is. If we want to open a trade on pound dollar, then this is here. Here is the pound dollar. All right. So this is what we call the terminal. We can also look at our account history here on our terminal, and we can look on our live trade or our active trade or our current open trade here below this terminal. And we can also adjust the size of it for us to have a better view of the chart. So we can increase it like this if we are looking on our account history. So let's say you want to view your account history, then you can customize it according to your liking. Okay, so again, this is uh, the terminal, and right here at the left corner, we can open our market watch. So just all you have to do is to click this one. This is the market watch, or we can press Control M. Okay, Control plus M to open the market watch. Okay, so something like that. Okay, so here on your market watch, you will then be able to choose if you want to trade the euro dollar, if you want to trade the pound dollar, if you want to trade the dollar yen, or if you want to choose a specific currency pair, then you can choose it right here on your market watch. So let's say you want to open the euro dollar pair. All you have to do is to drag it on your, of course, click it first and then drag it on the chart. And then you will then be able to trade the euro dollar. As we can see here, we are now trading the euro dollar. So we can see here below, right here, or we can see here, we can see it right here and as well as here. Okay. We can also right click and then open or click chart window. So let's say we want to open the dollar yen pair. So just right click into it and then click chart window. And then we are now trading the dollar yen as we can see right here. Okay. So for us to have a better looking chart, let's just close the market watch. Okay. And for us to open our trade, for us to be able to open a trade on this MT4 platform or on our MT4 account, we can do it here by clicking new order here, and then we can put our lot size. If we want to put one lot, or if we want to, let's say, two lots, three lots, or 0.1 lot, or 0.01 lot, we can do it here. We can also um, right click, okay, right click, and then trading, and then new order, and this pop-up box will appear. Or we can just click this button right here. See the little arrow here? Just click it. And then, as we can see, we can directly open a trade based on these two buttons right here. So, and we can just put our lot size here according to our analysis. All right. So let's make an open, or let's make a sample trade. So let me know what concept pair you want. So put it on the comment box. Let me know what currency pair you want to open a trade with, and then let's try to open a trade on that specific currency pair. Okay, let me as well show you this my FX book calculator. So in this tool, you will be able to calculate on how many lot size you need for you to be able to open a trade. All right. So while waiting for your comment, so shout out to Soren, shout out to Johnny Cano, shout out to the Greek Weaver, shout out to Erskine, shout out to Kim Trafalgar, shout out to Diandora. Hello everyone. So here Johnny Cano says, let's try to open a buy trade on the dollar yen. So we are exactly at the dollar yen right now. So let's say we want to put up a buy order here, then all we have to do is to first put your lot size here. So let's say we want to open, let's say just two lot size. Okay. All you have to do is to put two on your lot size here. And then once you, once you put your lot size according to your analysis right here, then all you have to do is to press buy. And then as you can see, our order will executed right away. Okay, as we can see, we have our position right here, and we can see on our terminal that we have our open trade on this dollar yen pair, right? So as simple as that, we can open a trade on just a single click. Okay, and if we want to put our stop loss, let's say we want to put our stop loss around this level. So for you to be able to open your crosshair, you can click this one, or you can just click your cursor, and your uh, crosshair will open. Okay. So let's say we want to put our stop loss below here. Then all we need to do is to click on our position and then drag it below here. And then our stop loss will now be placed below here on our price entry. And for our target, likewise, all we have to do is to drag it. Let's say we want to put our stop loss around there from this previous structure right here. Then after dragging it up into this level, then our target will now then be placed into this specific price point right here. And our stop loss likewise will be placed in this specific price point down here. All right. So let me now show you how to use the MyFX book calculator. Okay, so Omega Adesina said that he wants to open a trade on the Aussie yen. So let's try to open a trade on the Aussie yen using the position size calculator, which is the MyFX book right here, as you can see. So let's go on the Aussie yen right now. So here we are on the 1 hour chart or 1 hour time frame. So again, our uh, buttons are right around here or right here. So let's say we want to open a trade on the Aussie yen. So all we have to do first is to put Aussie yen here on the currency pair that we want to trade. And then once we put it, we need to put our account size. So in this case, we have, so here on our balance on our balance, we can see that we have 25,025.47 US dollar. So all you have to do is to put it right here, 25,025.47. Okay. And then here on your risk ratio, all you need to do or all you need to put here is your risk. So last October we talked about this. We talk about just putting not more than 1% on a single trade, right? So let's just say we want to open 1% risk on a specific trade for the Aussie yen pair. So just put 1 here. So that this will automatically calculate 1% of our account. And then for our stop loss, we need to calculate our stop loss. So let's say we want to put our stop loss below our entry candle, which is right here. So let's say our stop loss will be right here. Then all we have to do is to use our crosshair and then drag our crosshair from our entry point up to our stop loss, which is right here. And then as you can see, we have 3 columns, right? The first one or the second one will be our stop loss, which is the 141. So as you can see, we have 141 right there. So that means we have a stop loss of 14.1 pips. So remember, in MT4, you have to divide it by 10. So it means that if you saw a 141 like this, you just need to divide it by 10 for you to be able to get your stop loss. So let's say you want to drag your or to put your stop loss around this previous low, then your stop loss will then be 364, right? And then if you divide it by 10, it will be 36.4. Okay, so let's say we want to put our stop loss into this around this level. Again, drag your crosshair down, and then we have 131. So if you divide it by 10, it will be 100 or 13.1, right? So just put 13.1 here on your stop loss pips or on your stop loss pip calculator. And then once you fill up all of these text box, all you have to do now is to press calculate, and then it will give you the lot size that you need for you to be able to open a trade on the specific currency pair that you want to trade. So in this case, it give us a 2.66 lot size. So that means for every pip, it will give us 20 pips, right? Because it is 2 lots, right? Plus the 0.66, it will give us around $26, I guess, $26.6. So it will give us $26.6 per pip. And if we are aiming for a 13.1 pips, then that means we are risking $131 for this specific trade. All right, so let's now put this into action. So 2.66 lots. All we have to do is to put it right here, 2.66. And then once we press the buy order, our our trade will open. It will automatically executed. So as simple as that and as quick as that, our trade will automatically be open. Okay. And then all we have to do now is to drag our position down in this level, which is the price point for our stop loss. Or we can also double click this one right here, and then we can edit this one according to our liking, whether we want to change our stop loss. Okay, so let's say we want to put our stop loss below here, this previous low, then our the price of this, or if we look on this right side here on our grid, or on this side, we can see that the price is 93.683, right? So if we want, we can drag our position or this stop loss, we can drag it below here. So as quick as that, or we can also change it here by double clicking this one. Remember, you need to double click this, which is aligned with the SL, not this one, okay? This one. So once you click it, then all you have to do is to copy this price right here that we can see here, which is 93.415. Okay, and then once you edit this text box, just click modify, and then your stop loss will be put around this level. Okay, you can drag it to make it simpler, just like that, or you can change this value on this text box right here. All right, and for the take profit, it is just the same. We can drag it, or we can click this text right here, which is aligned with the TP, and then we can change the value of it according to our target. Okay, so let's say we want to put our target around this level, which is 94.495. So just double click it and then put 94.495, then press modify, then your target will then be put inside around here on this on this price point. Again, just click it, or just click this one and then put 94.495, then click modify, and then your target will then be placed within this price point, a specific price point. Okay, so that's our session for today. So having said all of these things, let's now move on our Q&A session. So for anyone who have questions, you can now ask some question on our comment box. So again, on this to recap on our webinar today, we learned what is the or what are the advantages of the forex market, and when to trade the forex, the session, the euro session, the dollar session, the yen, the Japanese yen session, or the Aussie session, the Sydney session, the Tokyo session, right? If you want to open a trade on the Japanese yen pair, then you may want to trade on the Tokyo session. If you want to open a trade on the Aussie pairs, then you may want to open a trade on the Sydney session. If you want to open a trade on the USD pairs, the dollar pairs, then you may want to trade on the New York session. Okay, and if you want to open a trade for the Euro pairs, then you may want to open a trade on the London session. And of course, the basic terminologies of Forex, like what is lot size, what is bid and ask price, as well as the margin and the leverage, right? And of course, the step by step on opening your order on the actual MT4 platform. Okay, so if you want to test your MT4 account, or if you want to test trading on the actual MT4 account, then you can open a demo account on our on us here at OctaFX for you to be able to test the MT4 and for you to be able to test your strategy using MT4. Okay, so for those who have questions, you can now ask some question. Okay, so here Jeremiah Mendoza asks, can you show us a sample of how you trade, like what you are looking for in a chart before trading? So good question. So on our upcoming webinars, especially on December 9, we are going to talk a lot about technical analysis. So tune in on December 9 if you want to learn how to read price action and if you want to learn how to read structure and how to look for a trade, then on December 9, we are going to talk about that. Okay, so to answer your question, first, every time I am opening a trade, so here, Jeremiah Mendoza again as show us a sample of how you trade and what you are looking for in a chart before opening a trade. So first, I am looking, let's say at the 1 hour chart. So in this example, uh, let's let's say we want to open a trade on the euro dollar. And here on this pair, we can see that the price is on an uptrend, right? So the first thing that I am looking is the trend. So if the price is going up, then I will look for a buy pattern or a buying opportunity. But if the price is going down or if the price is on a downtrend, then I will look for a selling opportunity. Okay? So in this case, we can see that the price is on an uptrend and we can see that our recent high is right above here. So what I am looking in a chart before opening a trade is to look for the the uh, the important levels of the chart or the structure. So as we can see here, we have this previous high, which was broken by the price. And then after breaking it, the price went up to this previous or this recent high that we have right here. So that means the price made a higher high, right? So what this means is that if the price pull back, pull back into this previous resistance, then this may end up as a new support. So this is where I will look for a buying opportunity for me to be able to open a trade. And then once I saw a buying opportunity, I will then go to my MT4 account and then look for the euro dollar pair and then be ready to open a buy option or a buy trade depending on my analysis. Okay, so that's how I am looking for a trade. First, I am looking for the trend. If the trend is up, then I will look for the price levels, the most important levels of the chart, like the previous highs and the previous lows. So in this example, we can see that we are forming a higher high and a higher low right here, right? And as we can see, the price failed to make a continuation with this uptrend, and the price is struggling to make a new high, right? The price tried to make a continuation, but the price didn't reach this previous high that we have right here. So that means this price right now or the euro dollar pair right now is showing us some weakness from its momentum. So what will I do right now is to look for this previous low, which is our support. Once the price broke this support, then I will no longer look for a buying setup because the momentum is now weakening. Okay, so that's how I am looking for for a chart before opening a trade. All right, so Jonic asks if the trading view is free for looking at trade. Yes, trading view is free, and we can use this as our charting platform. And once we saw a great opportunity to sell, let's say, for example, here on Eurodollar, the price is breaking this previous low. Let's say we want to open a sell trade here, then we can use our tool, our short position tool. We can use our this stop loss uh, area right here. Let's say we want to put our stop loss around this previous high, and then we want to put our target from this previous structure or this previous high. Then once you saw a selling opportunity, then all you have to do now is to go on your MT4 account and then press sell once you are ready to take a sell trade. Okay? So first, you need to calculate your risk. Go on your MyFX book calculator. Okay? Again, uh, put euro dollar because we are on the euro dollar. Put your euro dollar here and then put your account size and then put your risk. In this case, 1%. And in this case, we have 36.5 pips, right? As we can see here. So this is the beauty of TradingView, right? We can see how much pips we have for our stop loss and for our target. So in this case, we have 36.5. So just put it here, 36.5, then press calculate, and then it will give us the lot size that we need in order for us to open a trade. So in this case, we have 0.69 lot. Then all we have to do is to put it here, 0.69, and then once you put your lot size, and then if you are ready to take a trade, then all you have to do is press sell. Okay, and then once you press sell, as we can see, the trade will then automatically be executed. All right, and then after that, just drag your stop loss, or we can also look at the specific price that we have right here. It is 1.04239 right here, and we can copy it right here. Okay, and or we can just simply drag our entry like that. Okay, and for our target, like that. All right, so as simple as that. We can open a trade as quickly as that on our MT4 platform. Okay, so Mark Balyovar asks, do you prefer swing trading or day trading? So in my experience, I am more of a day trader than a swing trader. Okay, and here Jeremiah Mendoza asks again, how long before you became profitable? So in my case, I started trading uh, uh, October in 2018, October 2018. Then I became profitable uh, at around after 3 to 6 months. I tested my methodologies, I tested my strategy, especially the trend continuation, the breakout, the pullback, something like that. And then after 3 to 6 months, I saw some consistency on my results. And then after 1 year, I can say that I was finally be able to make consistent returns on my portfolio. Okay, so to answer your question on how long before I became profitable, I can say that I became consistently profitable trader after 6 months to 1 year. Because between those time period, the 3 to 6 months time period, I am just testing my strategy. I was testing my strategy on a demo account. I tested it on a demo account for 6 months before putting up a live money or a live account. Then after 1 year, then I became consistent with my results. Okay. So Jonick Ano asks what indicator I use. So I am a pure price action trader. I am not using indicator, but sometimes I am also using 20 EMA. So right here. So 20 EMA is good for filtering the trends. So here, as we can see, I am using it as a trend filter. Whenever the price is above the EMA, then I am looking for a buying opportunity. And whenever the price is below the EMA, like here, then I am looking for a selling opportunity. So here, someone asked, how much did you lose in that 6 months? So in my first days of trading, I blew my account in just 2 days. So that's a painful experience for me, but I didn't quit. I just uh, I continued to study. Then uh, just like what I mentioned earlier, after 3 to 6 months, I saw some consistent results, and after 1 year, I chose a specific strategy and I commit to that strategy. And up to now, I am using that strategy. But in just 2 days, I blew my account. All right. So Mark Balyover asks, what currency pair do I trade? Do I frequently trade? So I just trading common the most common currency pairs. So here, if you want to take a look at my watch list, or if you want to screenshot it, you may take a screenshot on my watch list. So as you can see, it is composed of the most common common pairs. I am not trading the exotic pairs. I am just trading the most common pairs that we talked about last week. Okay. Yes, emotional management is very important. So trading psychology is a very, very important topic in trading. If you are too emotional, then trading will be a lot harder for you. So again, before I forgot, if you want to open an account with us, you may use my promo code, which is PaulJM100. And then once you use my promo code, we will double your account. We will double your deposit. Okay, so any question before we end? Yes, I agree. Risk management, emotional management, and money management are very important in trading. If you have a poor risk management, then it will be a lot harder for you to gain a consistent result. Because forex trading or trading any market out there is all about risk management. If you have a poor risk management, then you will have a difficult time for you to be able to make consistent returns. All right. So any question? Last question before we end? So here for our last question, Shahazad Hussein Viha said, trade, hold, explain idea. So, if I'm not mistaken, you are asking about the you want me to explain the idea of holding a trade, right? So in this case, so let's say here for the euro dollar, we can see that the price is forming a lower high, right? So because of this, I decided to take a short trade, as you can see here. So I will hold this trade until the price either hit my stop loss or my take profit level down here. Okay, I will not interfere with the trade. So let's say the price went on my favor, and let's say the price is trading around here. I will not interfere with it. I will just let it go down until it reach my target. And if the price go against me, and if the price is trading around this level, I will not uh, interrupt the trade. I will not close it prematurely. I will let it hit my stop loss for me to be able to have a consistent result from my portfolio. All right. So again, I would like to thank you to thank all of you for joining us for today's session. So thank you for your time. Thank you for joining us today. So if you want to learn more about us, so please like this video, share it with your friends, and subscribe on our YouTube channel. Okay, so once again, this is Paul Mendoza, your trading speaker for today. So see you again next week for our next live webinar. All right, bye.